Today we have Dr. Praveer Sinha, CEO and MD, Tata Power, and Mr. Ramesh Subramaniam, CFO, Tata Power, with us on this call. I now hand the conference over to Dr. Praveer Sinha from Tata Power. Thank you, and over to you, sir.
Thank you very much. Good evening, everyone, and welcome to the Q4 earnings call. We hope all of you and your family members are safe and sound and taking care of yourself. This quarter has been very challenging for all of us, and we would like to thank all of you for the support that you have provided us during this period. Your support has motivated the company and our employees during this period to continue serving the nation. The company and its employees have contributed to various medical supplies, awareness drives, and volunteering, including telehealth lines. And our COVID response efforts are ongoing across 63 locations, including all our thermal plants, all our distribution businesses, and all our renewable sites spread across various states. As we reflect back on FY21, Tata Power is proud of the significant progress achieved on various strategic areas and is confident of achieving the targets as we had laid out during our last interaction with investors in August last year. As informed to you, we have successfully completed the takeover of the fourth distribution license in Odisha, the Northern Distribution Company, effective 1st April 2021. With the acquisition of the Northern Distribution Company, our total consumer base has grown from 2.6 million as on end March 20 to 12 million customers as of now. In line with our aspirations to grow in the distribution business, we have now become the largest private power distribution company in India in less than a year's time. The progress in TPCODL, which is the Central Distribution Company in Odisha, and which operates the erstwhile CESU license area, has been very encouraging, with the AT&C losses seeing a sharp decline within 10 months of operation and is below 30% in a record 12-month period. In fact, from the time we took over from 1st of June, in the 10 months of operations, the AT&C losses has actually gone down to 25.5%. This has proved our execution capability in being able to achieve the targeted AT&C losses and therefore create value for the customers in Odisha, including providing them reliable supply and customer services. The beginning of the Southco and Westco distribution companies in Odisha from 1st January has been very promising, and we are confident to write the same story in terms of better reliability, better quality service to the customer, as also improvement in the financial parameters and much better AT&C losses as we move forward. Cumulatively, all the three DISCOMs in their limited period of operation has been able to give profits against the originally planned losses for the first and second year of operation. And we can definitely expect a more powerful performance in the coming years from Odisha. The focus on clean growth business areas are showing results with robust performance from the renewable businesses. As a result, we achieved a stellar growth of 20% in PAT before exceptional items, which grew from 366 crores in Q4 last year to 440 crores in Q4 this year. With this focused growth and deleveraging, we achieved 16% growth in FY21 to end the year with a PAT before exception items of 1424 crores, up from 1231 crores last year. Of course, the high coal prices in the last quarter have impacted CGPL, but the coal companies have benefited from the price increase. With a full year saving of CGPL's interest cost of nearly 380 crores through the debt repayment which we did during the year, we expect CGPL will need very small support from Tata Power in the future. The increase in PAT was led by renewables cluster, which reported a 2x growth in PAT from 88 crores in Q4 last year to 175 crores this year. This growth has largely been driven by the performance in our focused areas in solar businesses, namely solar EPC, rooftops and pumps, despite part of the year lost in COVID-19. We clocked a 2.4 times growth in Tata Power Solar's annual revenue, growing from 2,141 crore last year to 5,119 crore this year. Our solar EPC orders continued a healthy growth with orders worth 2,294 crore won in Q4, taking the total order book to rupees 8,742 crores as on 31st March. Amongst various projects, we won 320 megawatts of solar project from NTPC valued at approximately 1,200 crores and a 55 megawatt solar project from GSECL from Gujarat valued at approximately 230 crores, reaffirming the position that Tata Power Solar is the prime choice as the EPC contractor for large developers of projects. In rooftop solar business, we have seen a major uptick in orders and execution in this quarter. Our rooftop revenue in this quarter crossed rupees 300 crores. Order book stands over 600 crores as on date. We installed 79 megawatt of rooftop solar in this quarter itself, and the total installation for the year reached 175 megawatt. We have seen very good response to our solar roof digital campaign, which has created more than 5 crore digital impressions and given us more than 41,000 leads. We have also entered into a partnership with SIDBI to offer easy and affordable financing scheme to MSME customers in the rooftop solar segment. On solar pumps, our business sold 6,500 pumps in this quarter, recording its largest quarterly revenue and a total sales of around 13,000 pumps during the financial year. While one of the quarter was mostly lost in COVID-19, our teams have done remarkable job in achieving such large-scale growth. The expansion and doubling of capacities in the cell and module manufacturing plant at Bangalore will make our domestic content projects much more competitive and thereby allowing Tata Power Solar to grow its business further. With the stellar performance in these businesses, Tata Power Solar's revenue for this quarter increased 5 times from 579 crores last year to 2,777 crores in this quarter. Our renewable development portfolio has received LOA and signed PPA for 88 megawatt solar in last quarter, we will have 1,314 megawatt of projects under implementation. With nearly 2,693 megawatt of operational wind and solar projects, our total portfolio with the existing orders with us will cross 4,000 megawatt. We have also won few more solar projects for which we are awaiting the LOA, post which we will inform the details. We continue to improve the availability across our renewable assets, both for wind and solar, with several operational initiatives, and this is reflected in the steady performance across the assets, with solar plants operating at 99 to 100% availability, while wind sites are running above 98%. In addition to that, our overdues from DISCOMs have also consistently come down over the year, and even when in a year there was stressed liquidity due to pandemic. The consolidated revenue for the fourth quarter stood at 10,255 crore compared to 6,881 crore previous year, mainly driven by the Odisha DISCOM and increased order execution in large-scale EPC projects, rooftop and solar business. The sectoral tailwinds and operational improvements are likely to continue to aid our various businesses, including the Odisha distribution circles, and the solar EPC business. Moving to the balance sheet, we have significantly reduced loans across entities, CGPL, Myton, and Trust Energy. We reduced our net debt by more than 7,500 crores over the last 1 year through divestment of various assets and strategic fundraise from promoters. With refinancing of certain debt and the reduced interest regime around the globe, our average interest cost has also reduced to around 7.4% compared to 8.3% last year. Our debt to equity has sharply been brought down to a level of 1.4 times to 4.2 times from 2 times last year. Net debt to underlying EBITDA stood at 4.06 times. The leaner balance sheet will give us the financial flexibility to pursue growth in strategic areas. In Prayagraj, we continue to see strong operational performance, achieving an 83% availability during the year. With liquidation of close to 2,100 crores of dues from the state DISCOM, Prayagraj has been able to both prepay long-term loans as well as to distribute cash to its shareholders, thus becoming a win-win transaction for all stakeholders. This turnaround of Prayagraj has been excellent because of reporting of PAT of 185 crore in FY21 compared to loss in the previous year. Our stake in Resurgent, representing our share of Prayagraj profit and interest on debt to Prayagraj, gave us a PAT of 100 crore in FY21 compared to a loss of 20 crores in the previous year. Our microgrid venture also achieved remarkable progress, installing 33 microgrids during this quarter, taking our total installed numbers to 161, with another 40 under installation, covering total 200 villages and nearly 4,000 customers. This venture is improving the lifestyle and promoting small-scale industries in rural communities, which will be a big catalyst to the rural economy. We have launched last year installation of electric vehicle charging points at all important railway stations in Mumbai, as also in suburbs and adjoining MMRDA area in association with Central Railway and UN Environment Program. During this quarter, we installed 175 new public charging stations, taking the new network of public chargers to 456, the largest in the country. We have also installed 80 ultra-high capacity bus chargers in Mumbai and Ahmedabad. As you all are aware, we are continuously working to improve our ESG ratings, and we have been ranked number 13 amongst the top 200 Indian companies by Sustain Labs, Paris, on various ESG parameters. We recently bestowed this Best ESG Disclosure Award under the ES category, mid-cap, from the IR Society Investor Relations Award 2020, held recently with BSC and KPMG, is a proof that the market and you are appreciating the efforts being made in this space by Tata Power. We thank you once again for your invaluable votes. We aspire to take our ESG disclosure to much higher level, and in line with this goal, our teams have set up dedicated ESG portal to provide all relevant information at a single location. We are also working with institutions like SBTi to set up scientifically derived emission reduction goals, and in near future you will hear much more on our ESG actions. The exit of defense business and the focus on cleaner sources of revenue will help Tata Power to further meet its ESG aspirations. As you are aware, for more than a year, we have been working on evaluating options for monetizing our renewable assets with a view to reduce debt. While we did receive very good response from prospective investors, a few developments have happened during the last 1 year. The first is that we have managed to reduce our debt equity ratio to 1.4, which now puts us in a very strong position for future growth. Second is that we have exceeded our targets on building of our consumer-focused green business of rooftop solar pumps, and EV charging. The third is Tata Power has a leadership position amongst the Indian utilities and is amongst a handful of few global players to offer such comprehensive offerings of clean and green energy products and solutions ranging from solar manufacturing, EPC, rooftop solar pumps, EV charging, and microgrids. Thus, Tata Power is uniquely positioned to leverage on its deep sectoral and market experience to gain market share in these offerings. Also, based on very good feedback from investors and other stakeholders, that this wide and deep set of offerings makes very comprehensive renewable platform which can eventually be valued significantly higher given the investor interest. In view of the above, we are working on a much bigger and wider renewable business growth during the coming year, which will open up far bigger opportunity to create shareholder value. We'll share with you our plans soon. We have invested in last 1 year in various building blocks, and these blocks have now started showing traction. We are excited about the unlimited opportunities available to Tata Power to grow to a leadership position in the Indian utility space and look forward to your continued support and in this remarkable journey. I have with me Mr. Ramesh Subramaniam, CFO, along with Mr. Kasturi, Chief of Treasury and Investor Relations, Mr. Anand Agrawal, the Financial Controller, and Rahul Shah from Investor Relations. I now hand over the call to the moderator for question and answer.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Anyone who wishes to ask questions, please press star, then 1. The first question is from the line of Sumit Kishore from Axis Capital. Please go ahead.
Good evening, sir, and thanks for the opportunity. My first question is, regarding your update on the merger of CGPL and Tata Power Solar with parent. Where are we? The second question is in relation to your monetization plans for your renewable portfolio, either through the InvIT route, and now we are reading in media about potential plans to go for an IPO. So could you please elaborate on that as well? I will ask a couple more questions, but I'll wait for your answers first.
Yeah. So Sumit, on the second question first, you asked about monetization. Mr. Sinha just mentioned we are working on that issue. As he said, we now find that during the last 1 year, a lot of improvements have taken place in the whole ESG space, and we're very bullish now that with the kind of more than expected, I would say progress in our wider green portfolio, we are now seriously looking at a much bigger value creating opportunity than what we started with during last year. So remember, when we started the InvIT journey, we had a high debt overhang, and also we are just kind of contemplating on a set of non-core sales and capital raise. I think all those plans are very tentative, and given COVID, that was a different, I would say, scenario. So we are now in a far better position, having accomplished what we've done in the last 12 months. So we are reviewing that situation, and we'll come up with something which is really much bigger in terms of value creation. So we'll have to wait. CGPL TPSSL merger. So we are in NCLT. We got all the approvals in place. We are waiting for the courts to open. As you know, they are still because of COVID, etc. Functioning is affected. So in due course, we expect the hearings to resume. But we have all the approvals in terms of shareholder approvals, regulatory approvals. This is in the last stages.
So the hearings in NCLT are yet to
yes.
be accomplished. Okay. The third question is, a very strong performance in Tata Power Solar Services Limited. So, my compliments on that. Could you break up the revenue for the full year, if possible? And since the quarter was so big, between EPC, rooftop solar, pumps, microgrid, EV charging, and maybe talk about the profitability, in these verticals, as they become more meaningful for you over the medium term.
So, if you see the presentation, it has the combined number. Okay, as you can see, we have given Tata Power Solar separately, and Valvan and TPRES separately, as you can see. And in one of the charts, also there is revenue detail. So right now, of course, there is, these are all early stage growth businesses, so we're not really talking about the bottom line right now. And it is more important is to create the market and grow the market, and that we are doing successfully. So I think that you're already getting. I think it's in slide 19, and followed by the breakup in slide 47, 48, 49, and also the consolidated view in slide 51. So you may like to refer to that. So right now, of course, this is what really is the key that probably one should know.
Okay, but to think of it in terms of EBITDA margin is still early for say rooftop solar or solar pumps.
Yes, but then we are doing well. That's all I can say, because these are to achieve scale. We are creating a good infrastructure to run these businesses. So we have put that in place. So when it scales up, you will slowly see the numbers for itself. So right now, of course, we are in growth mode.
Right. And finally, for CESU, where you took over operations in June 2020, what has been the cash burn, after taking operations? Because I'm sure as the AT&C losses would have come down gradually and you would have been below norms to begin with. I mean, there would have been a cash loss, right?
See, this contrary to what was perceived earlier when we won the bid. Thereafter, when we were finally handed over the company, there was a huge perception that we will burn cash in the initial. Surprisingly, and I think the credit goes to our team, which is on the ground during the COVID, has done a remarkable job, and we actually end up in this quarter with just negative 8 crores. So I think it's been a phenomenal progress, considering that this is the first year. The first year was supposed to be the worst, and therefore we have gone through the first year very, very successfully, both on the network, technical, and consumer end. So I think this story will only improve from here. And in so far as the full year is concerned, actually we've ended up with 28 crores of positive tax for the entire Odisha Discom.
In fact, if you see the slide 17, it shows that while the AT&C loss last year was 30%, when we took over, it was actually on 1st of June, and for nearly 2 months, there was no collection that had happened. Partial lockdown was there, and the AT&C losses were in the range of 40%, and we have ended the year with 29%. So it's a phenomenal amount of improvement that has happened in one year, or in 10 months that we took over, and on a 10 months performance, we have something like 25% AT&C loss. So it's a phenomenal improvement that has been done over there, not only in terms of loss reduction, but also in terms of reliability of service and customer services that is being provided.
Yes, indeed, it's a phenomenal performance. So thank you so much for answering my questions. I'll join the queue.
Thank you. The next question is from the line of Swarnim Maheshwari from Edelweiss Securities. Please go ahead.
Yeah, hello sir, good evening and congratulations for good performance. Sir, couple of questions. First, now sir, we were all waiting for the ramp up in the TPSL and indeed the ramp up happened. But I think, when you look at the EBITDA margins over there, that's just about, a shade below 7%. So, I think the last time we had spoken on this, this was expected that because of the operating leverage, this would be, a bit higher. So any specific reasons, despite the ramp up in the revenues, the margins have not been lifted in the TPSL side? That's my first question.
So we have some pressure on the module front, but these will ease off as we go through some of the past projects. We've had probably some pressure on the module front, but otherwise, I think we are all well on track to deliver the next set of balance orders. So that module prices have tightened all over the world.
Yeah, I do understand. So, I mean, can you quantify the the higher cost that has gone for the modules?
We don't give specific module related details as such, so we would continue that practice. But all we can say is that the going forward, we believe there will be two things. The new orders will factor in the new prices, so that should take care of the margins. And some of the existing orders may undergo some headwinds until they are completed. But it's a cycle, so at times we have had much higher EBITDA margins also. So on an average, we should be back to a much higher level than what we achieved last year. Got it.
Sir, the second question was just a clarification. Now, in that slide number 17, when you had mentioned that the AT&C loss has reduced to 29.5%, but then there is a footnote which says that the AT&C losses is basically 25.5. So this is the 25.5 is the average losses for the 10 months. Is that a correct understanding, or what is it?
Correct. That is correct.
But sir, we have then March 21, or say when you look at that 29.5% loss, which is there in that graph. So that is the exit number for the March month. Is that fair?
It is a rolling average. It's a 12-month rolling average. That's how AT&C is calculated.
Okay. Got it. Right. And sir, just finally, you have given enough dope on this renewable side on the InvITs or the IPO. I just wanted to understand one thing. So this, have you actually shelved it completely, or like you are reviewing the situation and perhaps there is something better in the offering, that's why there is some sort of a delay? What is it exactly?
I think it goes without saying that unless something there is better than what we started off with the InvIT, we won't be spending so much time. So I think clearly we're working on, nothing is ruled out by the way, but clearly we're working on something which will have far better shareholder value creation than what could have been achieved by InvIT. Because remember, it was only one piece, which was operational assets, which was on the take for the InvIT. So since, as Dr. Sinha mentioned, we've now grown far more confident of our wider portfolio. So we believe that we can do something better than it. We are working on it, and sooner or later we will come up with what we believe is the best way forward.
All right, sir. Thank you so much, and all the best.
Thank you.
Thank you. The next question is from the line of Vishal Biraya from Aviva Insurance. Please go ahead.
Hello. So my question pertains to the integrated operations of CGPL and coal companies. On slide 42, you've given the EBITDA and PAT. Could you also give the cash flows as to what has been the cash flow from operations on integrated basis, and if any FCF was generated?
Do you have it ready here? Cash flow, you want to cash. So let me tell you that in terms of coal companies, the PAT is cash because there's very little depreciation there. So, but we can give you separately coal cash numbers. But I just want to add that in this quarter, one of the things that is increasing the deficit in CGPL is that the coal prices shot up in the last 6 months, and there is this CRC index, which index is used for calculating tariff. So this is based on the previous 6 months. So we are currently also suffering due to the lag effect that the coal price, lower coal price in the first half is being charged to revenue in the current quarter, and the effect of the last 6 months increase the coal prices will be reflected in the subsequent 6 months notifications. So we will have probably the second half better than the first half of this year because of this lag. Because whenever there's a sharp rise, it affects that particular quarter, and March quarter was one of them.
Right, sir. Thank you. I'll come back for more questions. Thank you.
Thank you. The next question is from the line of Atul Tiwari from Citi. Please go ahead.
Yes, sir. Sir, again, a question on this renewable InvIT or the potential deal. So it is fair to assume that at least over the next 6 months to 1 year, we are not going to see any kind of, it's either a strategic sale or IPO, and the portfolio will be kind of grown over a longer time to a much bigger scale, and then we will see some kind of, capital action on that line.
No, I don't think we said any of that which you mentioned. Neither we said that we are not going to do anything in the next 6 to 12 months. So therefore, I don't think that's what we mean. I think we are it is in the works as to what is the best way to go about it. We are taking more time because we want to ensure that that's the best thing for the company, and you will hear it as soon as we decide. But it's not something which is going to take a year or 2 or 3 as you were probably suggesting. Yeah,
it will happen sooner than later.
Yeah,
it's very much in the works, and it will happen very quickly.
Okay, great. Thanks a lot.
Thank you. The next question is from the line of Puneet from HSBC. Please go ahead.
Yes, thank you for the opportunity. Sorry to harp on this renewable thing again. But is the understanding correct that now the idea is to monetize not just the renewable assets, but to bundle it with some of the more exciting parts like microgrid, EV charging, etc.?
No, the correct way to understand that is the current InvIT proposal was only operational assets. We are now, because of the important positive developments, that our desperation to get debt down is slightly less because of the good things that we've been able to do in the last 1 year on the balance sheet. I think we are far more confident now that let us look at not just that asset, but see whether there is a bigger opportunity here. So as I said, I think suffice to say at this point that this is we are looking at it more positively as to whether we can do something different or bigger. But certainly it is not clear at this point. I can't tell you exactly that whether one business or the other will be part of it or not part of it. But certainly we have a huge canvas to now choose from, given the fact that the other businesses have picked up very well, far better than what we expected.
Okay.
And they also look to be on track to achieve far better growth in the coming years. So therefore, that confidence is very different level now.
Yeah, so can you talk a bit about the business model that you now have on the EV charging and the microgrid?
We've been maintaining that the business model is evolving. And I think that you have to give some time for these businesses to mature to a level where you can call it as a fixed business model. Right now, it's evolving as we learn on the go, and as we are growing on the across the nations, we are also learning a lot on how to make this a profitable and scalable and modular in business.
Yeah. On the EV, let me tell you that there are 3 components of EV. One is the home charging, where it's a very good business model. We have tied up with OEM partners, starting with Tata Motors and some of the other manufacturers. And we are virtually 100% providing home charging facilities wherever they sell their electric vehicles. The second is the public charging, where we have already put nearly 500 public charging, and these are not only in cities, they are in 100 cities, and they are also on highways. And we have again big plans to scale this up, both for public charging as well as highways, and we'll be something like upward of 3,000 in next 1 year. The third is for fleet owners and bus charging. Again, in 3 cities, we are putting it for the public transport. This is in Mumbai, in Ahmedabad, and Jaipur, where we are already working over there. And going forward, we expect. So each one of them have very different business models. The fleet is a captive, and whereby we have assured revenue model. The home charging is a captive, where we have. The public charging is based on the type of penetration of electric vehicles that will happen. But considering that the type of ecosystem we are creating, we will be the biggest players, and we will have a huge market as and when the penetration of electric vehicle increases and the usage of the EV charging systems increases. On the microgrids, as Ramesh mentioned, that we have installed about 161 microgrids in different parts. Last 1 year, because of COVID, this was not the best of the time to launch the microgrids, but we have got very good success in many of the places. We are enhancing the capacity, and this is an evolving area that we have. And of course, the other businesses I've already shared with you, whether it was for rooftop or it was for solar pumps. We have got very good traction, and this is going to grow multifold in the coming years.
Okay. Good. So my other question is there any progress on the sale of the other smaller entities which you're looking at, or is that also now shelved for the time being?
You mean, sale of
the other small assets that you have, Georgia, etc.?
Oh, it's very actively going on, and of course, because of the COVID, etc., I think a lot of things are slowing down a bit, but there has been substantial progress. Otherwise, we hope to see this year, FY22, to close some of these ongoing sale initiatives.
Okay. And is it fair to assume that the CGPL settlement with the off-takers is now on the back burner as well because of COVID?
No, it's not a COVID issue. I think we have mentioned in the past calls also that the current formula which the off-takers have offered doesn't make sense for us. And we have indicated because they deviated quite a bit from the original ask, and therefore for us it doesn't make sense. And if we are only bound by many conditions and without the corresponding relief which we were seeking, it doesn't make sense. So certainly we will continue to kind of keep a watch, but right now that's not acceptable to us in the current form.